and related to AI has been holding up business investment. So overall, the baseline expectation for next year is, at least at the Fed, and I think with outside forecasters too, is a pickup in growth from today's relatively low level of 1.7%. I mentioned that the SEP median is 1.7 for this year growth and 2.3 for next year. You actually, some of that is due to the shutdown. So you can take 0.2 out of 2026 and put it in 2025. So it would really be 1.9 and 2.1. But overall, yes, for a few reasons, fiscal policy is going to be supportive. And as I mentioned, AI spending will continue. The consumer continues to spend. So it looks like the baseline would be solid growth next year.
Thank you.
Steve.
Thank you, Mr. Chairman, for taking our questions here. You had previously described rate cuts in terms of a risk management framework, and kind of following up on what Howard was asking, is the risk management phase of rate cuts over here, and have you taken out?
Welcome in, guys. How is everybody doing? FOMC live right now. I'm just reviewing levels here, and I'm watching the market with you guys. I figured if I'm here, I might as well pop on. I'm not going to post this to anybody, though. If anyone that's here is here, we're just going to watch the market together, and we're going to go over some things that's happening. I am listening to Powell on the background, so you're going to hear mostly him talking, but in about 15 minutes, I'm going to shut it off, and we're going to go over just charts. So let's watch together. I'll make some things. If I see something happen, we may take a trade, but probably not. I'm just going to be watching the market and seeing what happens. So let's see what happens.
Signs of weakness, and so we decided, as our framework tells us to do, that when the risks to the two goals become more equal,
685 is your bull bear pivot on SPY right now.
Really dealing with one of them, in that case, inflation, to a more balanced, more neutral setting. And so we did that.
Let's
we did
pull up
some
other
cutting,
datas.
and then we paused for a while to work our way through what was happening in the middle of the year. And then we resumed cuts in September, and we've cut now 3. We've now cut a total of 175 basis points. And as I mentioned, we feel like where we're positioned now we're well positioned to wait and see how the economy evolves from here.
If I could just follow up on the SEP, you have a whole lot of big increase in the growth numbers, but not a big decline in the unemployment numbers. And is that an AI factor in there? What is going on in terms of the dynamic?
This is an important question right now.
You get more growth, but you don't get a whole lot of decline in unemployment. Thank you, sir.
So the implication is obviously higher productivity. And some of that may be AI. It just also, I think, productivity has just been almost structurally higher for several years now. So if you start thinking of it as 2% per year, you can sustain higher growth without more job creation. Of course, higher productivity is also what enables incomes to rise over long periods of time. So it's basically a good thing. But that's certainly the implication.
Thank you. Colby Smith with the New York Times. Today's decision was clearly very divided. It wasn't just the 2 official dissents against a cut, but there were also soft dissents from 4 others. And I'm just wondering if this reluctance from several people to support recent reductions suggests that there is a much higher bar for cuts in the near term. And what exactly does the committee need to see if things are well positioned right now to support a January reduction?
Sure. So
this is probably the most important question so far.
And as I've mentioned here before, the situation is that our 2 goals are a bit in tension, right? So interestingly, everyone around the table at the FOMC agrees that inflation is too high and that we want it to come down, and agrees that the labor market has softened and that there's further risk. Everyone agrees on that. Where the difference is how do you weight those risks, and what does your forecast look like, and where do you, ultimately where do you think the bigger risk is, and it's very unusual to have persistent tension between
685 holding on SPY. Very important. This is a very important hold here
and
on
I think
SPY.
it's actually what you would expect to see, and we do see it. Meanwhile, the discussions we have are as good as any we've had in my 14 years at the Fed. They're very thoughtful, respectful, and you just have people who have strong views, and we come together and we reach a place where we can make a decision. We made a decision today. We had 9 out of 12 supported it, so fairly broad support. But it's not like the normal situation where everyone agrees on the direction and what to do. It's more spread out, and I think that's only inherent in the situation. In terms of what it would take, we all have an outlook in terms of what's going to come, but I think ultimately having cut 75 and the effects of the 75 basis points will only begin to be coming in. As I've said before a couple times, we're well positioned to wait to see how the economy evolves. We'll just have to see. And we will get, as you know, quite a bit of data. I should mention on the data, as long as I'm talking about it, that we're going to need to be careful in assessing, particularly the household survey data. There are very technical reasons about the way data are collected in some of these measures, both in inflation and in labor, in the labor market, so that the data may be distorted and not just sort of more volatile, but distorted, and that's really because data was not collected in October and half of November. So we're going to get data, but we're going to have to look at it carefully and with a somewhat skeptical eye by the time of the January meeting. Notwithstanding that, we will have a lot of the December data by the time of the January meeting. So we expect to see a lot more, but I'm just saying that what we get for example, CPI or for the household survey.
He basically did not answer the question.
Really carefully and understand that it may be distorted by very technical factors.
And just one more question on dissents. You talk about it in a very positive way, just given the complicated nature of the situation we're in economically. But is there any point in which those dissents become counterproductive, either to the Fed's communication and the messaging around the policy path forward?
SPY's still holding 685, which I think is bullish, but let's see this kind of actually closes.
I don't. I would say, again, these are good,
thoughtful,
respectful discussions, and you hear people say, and you hear many outside analysts say the same thing. I could make a case for either side. I could make that case. It's a close call. We have to make decisions, and we always hope that the data will give us a clear read. But in this situation, you have competing. If you look through the SEP, you'll see that a very large number of participants agree that risks are to the upside for unemployment and to the upside for inflation. So what do? You've got one tool. You can't do two things at once. So at what pace do you move? What size moves do you make, and that kind of thing? And what's the timing of them? It's a very challenging situation. I think we're in a good place to, as I mentioned, to wait and see how the economy evolves.
Nick.
Nick Timmerosa, The Wall Street Journal. Chair Powell, there's been some discussion recently of the 1990s. In the 1990s, the committee did 2 discrete sequences of 3 quarter-point cuts, one in 1995-96 and one in 1998. And after both of those, the next move in rates was up, not down. With policy now closer to neutral, is it a foregone conclusion that the next move in rates is down, or should we think of policy risks as genuinely two-sided from here?
So I don't think that a rate hike is anybody's base case at this point, and I'm not hearing that. What you see is some people feel we should stop here and that we're at the right place and just wait. Some people feel like we should cut once or more
Powell.
This year and next year. But when people are writing down their estimates of policy of where it should go, it is either holding here or cutting a little or cutting more than a little. So I don't see the base case as involving that. So of course, a data set of 2, now 3, is not a big data set. But you are right about those 2 3-cut times in the 90s.
If I could follow up, the unemployment rate has been rising very gradually for the better part of 2 years, and indeed the statement today no longer describes the unemployment rate as remaining low. What gives you confidence it won't continue rising in 2026, especially when housing and other rate-sensitive sectors still appear to be feeling restrictive policy from the, notwithstanding the 150 basis points in cuts prior to today?
Regardless of data right now, I think 685 is your pivot still. As long as you're holding right now, market's holding, you should expect upside. I think market goes back at this point, as long as we're here, holding this green level, I think we go into 688. I'm not saying a trade, I'm not in any positions, but that to me is my understanding. Let's keep watching.
One or two more tenths, but we won't see, any kind of a sharper downturn, which we haven't
Big
seen.
supply
any
at 688 though.
evidence
Be
of at
careful
all.
at
At the same
688.
time, policy is still in a place where it's not accommodative, and we feel like we have made progress this year in non-tariff related inflation. And as tariffs come through, as they flow through, that'll show through next year. But as I said, we're well placed to wait and see how that turns out. That is our expectation, but we're going to start to see the data, and it'll tell us whether we were right or not.
Claire. Claire Jones, Financial Times. A lot of people interpreted your comments at the October meeting that, when there's a foggy situation, we slow down, to mean that, there wouldn't be a cut now, there'd be a cut in January instead. So it'd be good to get a sense of why did the committee decide to move today rather than to move in January instead? Thank you.
Right. So in October, I said that there was no certainty of moving, and that was indeed correct. I said it's possible you could think about it that way, but I was careful to say other people could look at it differently. So why did we move today? I would point to a couple things. First of all, gradual cooling in the labor market has continued. Unemployment is now up 0.3 from June through September. Payroll jobs averaging 40,000 per month since April. We think there's an overstatement in these numbers by about 60,000, so that would be negative 20,000 per month. And also, just to point out one other thing, surveys of households and businesses both.
SPY moving closer to supply, 688. Be careful of 688 today. 688 to 680, 688 to 690, very big level on SPY.
Continued to cool gradually, maybe just a touch more gradually than we thought. In terms of inflation, it's come in a touch lower, and I think the evidence is kind of growing that what's happening here is services inflation coming down, and that's offset by increases in goods, and that goods inflation is entirely in sectors where there are tariffs. So that does build on the story, and so far it's only a story, that
Banks are very strong.
that the goods inflation, which is really the
Big
source of
level
the excess
at
at this
54.
point, that
On the XLF.
almost more than half the source of the excess inflation is goods, is tariffs. And you've got to say then, so what do we expect from tariffs?
SPY looks strong.
And I would say that is to some extent down to looking for broader economic, heat. Do we see a hot economy? Do we see constraints? Do we see what's going on with wages? You saw the ECI report today. It doesn't feel like a hot economy that wants to generate, Phillips curve kind of inflation. So we look at all those things, and we say that this was a decision to make. It obviously wasn't unanimous, but overall, that was the judgment that we made, and that's the action we took.
And just on the ample reserves point, how concerned were people around the table about some of the
It's
tensions
fairly
we've
dovish
seen
comments
in money
overall.
markets? Thank you.
I wouldn't
General
say
consensus is saying
concern. So
dovish.
what really happened is this.
Market also likes.
Balance sheet shrinkage, sometimes called QT, went on. We had a framework in place for monitoring it, and nothing happened. The overnight reverse repo facility went down pretty much close to zero. And then beginning in September, the federal funds rate started to tick up within the range, right? And it ticked up almost all the way to interest-on reserve balances. There's nothing wrong with that. What that's telling you is that we're actually in an ample reserves regime. So, we knew this was going to come. When it finally did come, it came a little quicker than expected, but we were absolutely there to take the actions that we said we would take. So, and those actions are today. So, we announced that we're resuming reserve management purchases. That is completely separate from monetary policy. It's just we need to keep an ample supply of reserves out there. Why so big? The answer to that is, if you look ahead, you will see that
banks look
April
super
15th
strong.
is coming up.
SPY is not
and
going to sell if banks are strong.
Our framework is
Look
such
at
that we
Excel
want to have
right now.
ample reserves even at
We have
times
supply
when
above us, though,
reserves
so
are
if
at
you
a
are
low
long
level
SPY of
temporarily.
685,
that's
make
what
sure you're
happens on
selling at
tax
this level
day.
here, 688.
People pay a lot of money to the government.
TGT.
Reserves drop sharply and
Yeah, strong.
temporarily. So this seasonal buildup
Amazon strong.
that we'll see in the next few months was going to happen anyway.
Apple over
It was
280,
going to
very
happen
key
because
break here. If
April
Apple breaks
15th is
280,
April
this is a
15th.
huge long for
There's
us.
also a secular ongoing growth of the balance sheet. We have to keep reserves, call it constant as it relates to the banking system or to the whole economy. And that alone calls for us to increase about $20-25 billion per month. So that's a small part. That's going on. It's
Tesla?
also happening in the context of a temporary few-month
450 in Tesla.
front loading to get reserves high enough to get through the tax period in mid-April. So that's what's happening there.
Andrew.
Thanks, Mr. Chairman. This is the last post-FOMC press conference before an important Supreme Court hearing next month. Can you talk about how you're hoping the Supreme Court will rule? And I'm just curious why the Fed's been so reticent on such a pivotal matter.
It's not something I want to address here, Andrew. We're not legal commentators. It's before the courts, and we think we don't think that we help matters by trying to engage as a.
Powell just called the journalist an idiot. That's what just happened.
No, thanks. I don't know if that means I get 3 questions, but
just one more.
I guess I wanted to come back to the 1990s
688 on
question.
SPY, guys.
And,
SPY
do you see that
made the
as a
move.
useful model for thinking about
Understand
what is
this
happening in the
is an
economy right
area
now?
the market probably does pivot.
I don't think it rises to that level. So
If you were long at 685, be a profit taker and
Was
dies.
it 19 where we cut 3 times? But this is such a
Tesla's
unique
breaking
situation.
450, though. It's a long 450 break on Tesla's huge.
It's not the 1970s, let's put it that way, but we do have tension between our two goals. And so that's just unique in my time at the Fed, and I think going back a long ways, we haven't had that. In our framework, as you know, says that when that's the case, that we try to,
This
take
is
a balanced
ES
approach
6900
to the
flat.
two things.
We are
look at how
tapping
far they are
ES
and how long it would take to
6900
get them
flat
back
right
to-
now.
Each of them
At
back
this
to the
exact
goal.
second.
And that's a very subjective analysis, really. But it just tells you you've got to, and I think ultimately what it says is when they're broadly equally threatened or equally at risk. you should be
Broad-based strength,
kind of
though,
neutral.
across the board.
'Cause if you're,
You have
if you're
both
either
tech strong and you have
accommodative
bank strong. I wonder what
or
healthcare is doing.
tight, you're
UNH,
favoring one or the other
everything's strong.
goal. And
though.
so we've been trying to.
So we
we've
are
sort of
trading in supply, but
moving in
broad-based
the
we are
direction
strong.
of neutral.
So
Now we're
I don't
in
know
the
what's
range
going
of
to happen
neutral.
here.
We're in the
Supply.
high end of the range of neutral, I would say.
This is
And
supply,
that's
though.
what we're doing now.
This is resistance,
It so happened that
688,
we've cut
30,
3 times. We haven't made
1600
any
level,
decision
yes,
about
flat.
January, but as I've said, we think we're well positioned to wait and see how the economy performs.
In a perfect world, you see us fail lower here and then eventually break it later on in the session.
Thanks, Mr. Chairman. Edward Lawrence with Fox Business. I wanted to ask you, the inflation expectations has come down in your SEP report. Do you see the tariff price increases as passing through in the next 3 months? Is it a 6-month process that we're looking for that to end? And then because of that, is jobs the threat to the economy?
So with tariff inflation, it takes, there's the announcement of a tariff, and then there's, they start to take effect, and then it takes some
Market's
months.
reacting off supply right now.
Goods may have to be shipped from other parts of the, it may take, quite a while for an individual tariff to take its full effect. But once it's had that effect, then the question is, isn't that just a one-time price increase? So we actually look at it, all of the announcements and what you get from all that. You see sort of for each one of them, there's a time period, and then it's fully in. So if there are no new tariff announcements, and we don't know that, but let's assume there are no major new tariff announcements, inflation from goods should peak in the first quarter or so, right, or roughly. We haven't been able to predict this with any precision. No one is. But call it the first quarter or so of next year should be the peak. And from here, it shouldn't be big. It should be a couple tenths or even less than that. We don't really have precision on this. And after that, again, if there are no new tariffs that are being announced that will take 9 months to get fully in, and 9 months is also an estimate.
Market's still reacting off supply.
Then you should start to see that coming down in the back half of next year.
And I want to see if I could address sort of the elephant in the room. The president's been talking openly about a new Fed chairman. Does that hinder your current job right now?
You heard my fills in the chat. I know you heard my fills in the chat. I can't hide it on YouTube.
No mulligans for it.
Oh, man.
Michael McKee from Bloomberg Radio and Television. 10-year rates are 50 basis points higher than when you started cutting back in September of 2024, and the yield curve basically has been steepening. Why do you think that continuing to cut now, especially in the absence of data, is going to bring down the yield on the thing that will move the economy the most?
So we're looking at the real economy and focusing on that. And you've got when the long bonds move around, you've got to look at why they're moving around. If you look at inflation compensation, it's very that's one part of it is inflation compensation break-evens, and they're at very comfortable levels. They're at levels consistent once you get out past the very short term now. Break-evens are at at quite levels that are quite consistent with 2% inflation over time.
In my view, if you want to pull back the long spy, you want to
going
longer on the 60
out there that suggests concern about inflation in the long term or anything like that.
We're just trading in supply right now.
I look at these things pretty regularly.
It's possible we break it.
Surveys
This is
are all
supply and spy.
saying
Supply and
that,
spy and spy, yes.
The public understands our commitment to 2% and expects us to get back there. So why are rates going up? It has to be something else. It must be, an expectation of higher growth or something like that. And that's a lot of what's been going on. I mean, you saw a big move, toward the end of last year, which was not to do with us. It was to do with other developments.
Well, you just mentioned that the public is expecting you to get back to 2%, and Americans overwhelmingly are citing high prices, inflation as their number one concern. Can you explain to them why you're prioritizing the labor market, which seems relatively stable to most people, instead of their number one concern, inflation?
So we, as you know, we have a network of contacts in the U.S. economy, which is really unmatched if you go through the 12 reserve banks. So we hear loud and clear how people are experiencing really costs. It's really high costs. And a lot of that is not the current rate of inflation. A lot of that is just embedded higher cost due to higher inflation in 2022 and 23. So that's what's going on. And so the best thing we can do is restore inflation to its 2% goal, and our policy is intended to do that, but also have a strong economy where real wages are going up, where people are getting jobs and earning money, and we're going to need to have some years where real compensation is higher, it's positive, significantly positive, so nominal wages are higher than inflation, for people to start feeling good about the affordability issue. And, so we're working hard on that. We're trying to keep inflation under control, but also support the labor market and strong wages so that people are earning enough money and feeling economically healthy again.
Victoria. Hi, Victoria Guida with Politico. Just to follow up on that, I mean, this is now the third time that you've cut this year and inflation is around 3%. So is the message that you're sort of trying to send with that you're okay with where inflation is for now, as long as people understand that at some point you still want to get back to 2%?
To be honest, I will be looking for shorts here. This is supply on SPY. If I see us fail here at 6,900, I would look for a short and have a stop above here. That's the only other trade idea I see right now is supply rejections. If we clear 6,900 ES with conviction, then obviously we're breaking highs. But right now, that's the only thing I see. So let's see what happens on SPY, how it reacts. But we are trading in supply here. So we move from demand to supply. Let's keep watching.
Seems to have significant downside risks. People care a lot about that. That's their jobs. That's their ability, if they get laid off or if they're entering the labor force, to find work. So that's really important to people. The story with inflation, and we're well aware that this is
see it happening.
a
You
story
guys
at
see
this
it
point,
on the
is
smaller
that
time frames, right?
if you get away from
Reactions
tariffs,
that supply here.
inflation is in the low twos, right?
Volume's-
so it's really
volume's
tariffs
high right now.
that's causing most of the inflation overshoot. And we do think of those as likely to, in the current situation, as likely to be a one-time price increase. Our job is to make sure that it is, and we will do that job. But right now, you've got this difficult balance, and there are risks to both sides. There's no risk-free path.
Transparently, I may look for a short here, guys.
If it was just inflation,
I
the
may
labor
take it
market
on
was
like
just
4 or 5 con,
really
but
strong, and then rates would be
this
higher,
is,
as they were for more than a year. We didn't have
This
to
is kind
worry
of too
about
good not to
inflation.
take. Let's
Sorry,
give it a
about
second.
the labor
Let's
market.
wait for this camera to close at least.
Because the labor market, unemployment was very low, if you remember, when inflation was very high. There was a labor shortage, so we could focus entirely on inflation. Now,
I should not be trading. I should not be trading on live with you guys.
And I think
for
we're
FOMC,
doing the
but
best
I mean,
we
this
can
is,
for people. They
if you
also
okay,
care about their
I'll give you the
jobs.
idea.
They
If
do
you
care
were to
about
trade this,
affordability.
have
And
a
the best
short
thing we
here
can do there
at the
is
stop
to-
of
is
high.
both
That's
to
the
support
only thing you can do right
economic
now.
activity, but also,
For me, at least, that's the only system I see. We're
make
just trading in
sure
supply.
that when tariff
Take that as you
inflation
will.
goes
I mean,
down and disappears,
you-
inflation lands around 2%.
You still have broad-based strength, though. That's the only problem. You still have broad-based
Thanks so
strength.
much,
You
Elizabeth
still
Schulze
have
with
Apple
ABC News.
strong.
Just to follow up, you keep
Healthcare
talking
strong.
about
Which
job
bank's
growth
doing?
being negative. Why do you think job growth is so much worse than some of the
it's so
official data?
strong.
Why do you think job growth is, to follow up on your comments about
Yeah.
job growth, why is it so much worse than the official data is suggesting?
Oh, well, we know, I think I don't think this is particularly controversial. It's very difficult to estimate job growth in real time. They don't count
Let's wait.
everybody.
I'm not
They
filled
have a
yet.
survey.
If I take
And
it,
there's
Phil,
been
I'll
something
let
of
you
a
guys know.
systematic overcount. And so we expected, and they correct it
But
twice
this is
a
where
year.
this is where it
So
would
the
be.
last time they corrected
If it's
it, we
anywhere,
saw
the market's going to
correction
fail.
would
It has to be
800,000
here.
or 900,000. I won't get the numbers exactly right. And that's exactly what happened. So we think that has persisted. And so there's an overcount in the payroll job numbers, we think, continuing, and it will be corrected. I don't have the exact month in my head right now, and that's just, I think forecasters generally understand that. So, and we think it's about 60,000 a month, so 40,000 jobs could be negative 20. And, that could be wrong by 10 or 20 in either direction. But in any case, but the thing is, that's job creation in a way, that's demand. Labor supply has also come down quite sharply. So, if you had a world where they're just
Tesla's
there's just no
along, yeah,
growth in
Tesla's
workers
along.
and you
Also,
really don't
Apple
need a lot of
tomorrow, I
jobs
think
to
is going to be
have full employment.
top watch. Apple
Some
tomorrow,
people
280
argue
build if it does
that's
happen.
what we're looking
This
at.
is
But
major
I think
watch.
a world where job creation is negative, I just think we need to watch that situation very carefully and be in a position where we're not, pushing down on job creation with our policy.
When we're talking about supply, we have seen major American employers like Amazon cite AI in job cuts. How much right now are you factoring in AI into the current weakness in the job market?
So it's probably part of the story. It's not a big part of the story yet. We don't know whether it will be. But, for example, if you look at, you can't miss the big announcements of layoffs and also companies saying that they're not going to hire anybody for a long time, and they cite AI. That's all clearly happening. At the same time, people are not filing for unemployment insurance, and since job creation, job finding rates are extremely low, if there were big numbers of layoffs, you'd expect the continuing claims to go up, and you expect new claims to go up. It really haven't much, so it's a little bit curious. But longer term, though, the question is, what are we going to see here? And we don't know, but it's it may be that in past technology, really significant technology innovation eras, you have seen some jobs destroyed and other jobs made. Ultimately, what's happened for a couple hundred years is when you get through all that, you have higher productivity and you have new
about
jobs
13
and there
more
are enough
minutes of
jobs
Powell
for
talking.
people.
It looks like maybe 10 minutes.
This may be different. It's every time we have a wave of technology, we think, oh, this could put a lot of people out of work. What are they going to do? In the past, there's always been more work and higher productivity, and incomes have risen. what will happen here, we're going to have to see. But right now is such early days. We don't think we see much. It's certainly not showing up in layoffs yet.
Thank you, Chair. Enda Curran, Bloomberg News. Given the breadth of views on the policy committee, why is there such a division of views between
On the policy what?
On the committee.
Thank you.
Why is there such a division of views between the presidents and the board members?
You know, it's not so stark as that. The views are more varied on in each group as well. There's some of that, but I would say they're also governors and they're people on both sides in both groups. I wouldn't put too much in that.
Okay, and just to follow up, please, given your growth upgrade, how would you factor in, or what would be the economic impact if the Supreme Court is to strike down the tariffs that they're currently hearing, please, in terms of growth and inflation? Thank you.
I really don't know. It would depend. It would depend on a whole bunch of things we don't know. So I can't really help you there.
Powell is a savage today. He's like attacking these journalists.
Thank you, Chair Powell. Christine Romans, NBC News. I wanted to ask you about how the higher income households are really driving spending right now. They're backed by home equity and stock market wealth, but lower income consumers are really struggling with the accumulation of 5 years now of rising prices. It's price levels, not really the inflation rate, holding some of these families back. How sustainable is this so-called K-shaped economy, and what are the Fed's thoughts on whether that's a risk going forward?
So we do, through our vast network of contacts and just through our observation of what's going on in the economy, we hear about this a lot. If you listen to the earnings reports for consumer-facing companies that tend to deal with low and moderate income people, they'll all say that we're seeing people, tightening their belts, changing products that they buy, buying less, and that sort of thing. And so it's clearly a thing. It's also clearly a thing that, asset values, housing values, and
Tesla ripping. Tesla absolutely ripping.
They tend to be owned by people more at the higher end of the income and wealth. So as how sustainable it is, I don't know. Most of the consumption does happen by people who have more means. I think the top third accounts for way more than a third of the consumption.
280 tomorrow on Apple is going to be my major watch, though. Look how well it's building on large time frames.
The best we can do is to have a price stability and a strong labor market.
SPY is tickling me under shore right now. You guys see it too, right?
A very, very long expansion that ended with the outbreak of the pandemic.
Let's see. We want to see the first time a crack would be Tesla failing.
8 months or something like that. The longest one in recorded history. In the last 2 years, most of the largest part of the wage gains were going to people in the bottom quartile, the bottom part of the low and moderate income. So, having a strong labor market for a long period of time is really, really good from a social standpoint. It's helping people at the lower income levels, and that's what we all want to get back to. But we got to have price stability, and we got to have full employment, maximum employment.
And just quickly, you mentioned the housing market remains kind of weak. With these rate cuts that we've seen, is there a chance we're going to see more affordability in the housing market so more people can maybe enjoy that part of wealth creation? I mean, the average age or median age of a first-time home buyer is now 40 years old. That's the highest on record.
Yeah, so the housing market faces
everything right now is strong, Skate.
Some really significant challenges. And
it is.
I don't know that a 25
the weakest
basis
in a strong market
decline in the federal funds rate is going to make much of a difference for people.
But market's in supply right now, though. You're seeing look at SPY how it's trading here.
Very, very
look at the candles getting tighter and tighter and tighter.
Low rate mortgages.
I do think we see a sell.
And got the really low.
It's hard to time it right now during FOMC
to move. And we're a ways away from that changing. Also, we haven't built enough housing in the country for a long time, and so a lot of estimates suggest that we just need more housing of different kinds. So, housing is going to be a problem, and really the tools to address it are we can raise and lower interest rates, but we don't really have the tools to address a secular housing shortage, a structural housing shortage.
Chris.
Thanks. Chris Rugaber, Associated Press. You mentioned on inflation, services inflation being low, goods inflation looking like maybe it'll peak. We had the wages report you mentioned today
Yes,
showing
guys, this is big right here.
moderating wage growth. Where are the inflation risks? It looks like inflation is cooling in your view. At the same time, you have
There's going to be a delay on
potentially
YouTube,
hiring.
though. I know there's going to be a delay here.
Why not? Why aren't we hearing more about maybe more cuts in this environment?
Well, I think the risk in inflation is pretty clear to see, and that is, we see higher inflation. As I mentioned, most of the inflation over target is from goods, and we expect, most of us, that inflation will be a one-time price increase and then come down. We just came off an experience where inflation turned out to be much more persistent than anyone had expected. Is that going to happen now? That's the risk. The risk is either that tariff inflation just turns out to be more and more persistent, maybe because companies who are now holding back from passing through the tariffs will just keep doing that. So you see that. I think the other possibility is less likely, and that is just that the labor market gets tight or the economy gets tight, and you see just traditional inflation. I don't see that as particularly likely. But so I think, again, all across the committee, people see the picture pretty similarly, but see the risks quite differently. And some people do see the inflation risk, and I wouldn't dismiss that case. I don't dismiss that case, but you've got to make an assessment, and this is the assessment we made.
Hi, Chair Powell. Neil Irwin with Axios. So this has come up a couple of times today, but to be clear, do you believe that we're experiencing a positive productivity shock, whether from AI or policy factors or whatever? And how much is that driving the higher GDP projection in the SEP?
So yeah, I mean, I never thought I would see a time when we had 5-6 years of 2% productivity growth. This is higher. This is definitely higher, and it was before.
All right, lads. Nothing's really happening. All the big questions have come out. He's still talking though. I'm watching the charts with you guys now.
People have to find other jobs, though. So it could have productivity implications while also having, social and labor market implications that we don't have the tools to deal with. But yes, I think we're definitely seeing higher productivity. I think it's a little quick to be saying it's generative AI.
I think that this is the short. I'm not already in, but I'm going to get filled shortly. If I see this candle, which is already failing here, I should just get filled. 688.50. It's a risky trade, guys. It's during FOMC. I'll let you guys know when I actually get filled. All I'm doing now is listening to Powell. I don't want to get caught in a Powell candle.
Many things pushing in different directions on where the neutral rate would be. But yes, that argument does come up.
Matt Egan.
Thanks, Chair Powell. Matt Egan with CNN. After today, you only have 3 more meetings at the helm of the Fed. Since becoming Fed chair, you've seen multiple trade wars, the pandemic, COVID reopening, period of high inflation. I know your term's not up as chair until May, but I'm wondering if you've given any thought to what you want your legacy to be.
My legacy. My thought is that I really want to turn this job over to whoever replaces me with the economy in really good shape.
All right. I'm going to lotto it, though. Let me see. What are these contracts trading at right now?
To think about bigger things. I hope many years ahead to worry about that, but there's enough to do.
Relatedly, have you given any more thought, and can you tell us any more about your plans on whether or not you plan to stay on the Fed Board of Governors even after your term as chair expires?
Again, I'm focused on my remaining time as chair. I haven't got anything new on that to tell you.
Go to Mark for the last question.
Chairman, Mark Hamrick with Bankrate. Even while many price levels remain elevated, the reductions in the federal funds rate means that savings rates, or yields to be more precise, have peaked while key borrowing rates remain elevated. And that's, as we've discussed here, as many Americans struggle with liquidity or emergency savings challenges. Is that just collateral damage or an unintended consequence because your tools are limited and household liquidity constraints, insufficient money in the bank?
I don't know. I wouldn't agree that that's collateral damage of our. I mean, over time, we do what we do in order to create price stability and maximum employment, and those things are hugely valuable to all the people we serve. When we raise rates to bring inflation down, that does work by slowing the economy, but we've moved back our policy back down to where it's certainly not strongly restrictive at this point. I think it's sort of in the range of neutral. So that's what we're trying to do, and I would want people to understand that. I think what people are feeling is the effect of higher prices. There was a global wave, sort of every large economy in the world.
Is that also SPX 90 or 6900?
Market-based economy in the world had a wave of inflation that looked an awful lot like ours. We actually came through better than any other country.
This wick high here
better.
on ES,
we had higher
or on
growth,
SPY,
we had better
and ES
labor market,
is
and this is really due to the American
flat
economy.
SPX.
We have an extraordinary economy, and people are innovative.
So
they
if
work
you're
hard,
short, that candle high should be
and,
your stop.
So
that's my plan.
All of us
I'm short SPY, guys. I'm short on just.
Really fortunate to have.
I'm telling you, I'm
to have
short
the
on a
US
very
economy.
small
So,
amount of size.
Thank you very much.
This is my FOMC lotto. And that's it. Powell's done. That's it. Powell is finished. So far, market has moved from 685 to 689, essentially, supply. The question is, do we get the supply break today? As of right now, it looks like market's rejecting. And you're seeing that this is still supply. Market's still rejecting. I wonder where we go. Next level on SPY is 687. I would expect 687. 687. He's done talking though, guys. He's done talking. That's 17% already on 0-day contracts if you guys are in SPY. Not much, but let's see. I would expect lower. Personally, I would expect lower after tapping a big supply like this, but let's see what happens. It's a lotto, so for a lotto, I would just hold this. I'm not going to take profit at like 15%. This is not a real signal, guys. This is YouTube. We are YouTube degen trading together. So don't go crazy, but that is a supply rejection. You are seeing the market reject off supply. So if you are short, you know what the plan is. A lot of things topping out, but let's see what happens. I wonder where Apple goes. Apple major watch tomorrow. Apple major watch tomorrow. Pretty dovish comments across the board on Powell too. Everything he said was mostly dovish. Market responded. Market has reacted to it. Let's see. We'll see a lot of volatility into close today, guys. We'll see a lot of volatility into close today. What are you guys watching? I'm reading the chat now. Now Powell's done. We can read the chat. I'll stay here for 10 more minutes, guys. I'll stay here to 3:35, 3:30, 10 minutes or so. So this candle high on SPY, very important, right? This 688.80, right? That's the level we have to stay under for us to actually sell today. Otherwise, we're going to break out, right? So this is the mega supply, and you see the signs of market rejecting. The question is, do we continue selling after topping out, right? Apple, obviously, Apple 280 is big. We spoke about that probably a dozen times already. Tesla's strong. Tesla's strong. I mean, tomorrow we can probably watch that the lower 450s, 452 and change. We also have 460. So can we go to 690 today? I mean, if we clear this wick high here on SPY, we go to 690. That's just what it is. If we clear this wick high right here, this candle high right here is the only thing that matters right now for the market. It is SPX level. It is a SPY level. It is also borderline the ES level. Okay, the ES level is really 6,900, but it is a supply that we have. Yeah. Market did react off supply, but now we're just right back to it again. Let's do a scan through the market. Let's look what else is moving today. NVIDIA. So someone asked about NVIDIA before, and NVIDIA is not along for me right now. The reason why is it's because everything is like the market's strong. Look at Tesla. Tesla's ripping. Look at Apple. Apple's ripping. But you have NVIDIA, names like NVIDIA, which are very stagnant. So NVIDIA not along for me this morning or this afternoon. You don't want to be, when you have a strong market like this, you want to see other names moving strong with you, not you don't want to be longing a weak name in a strong market. But NVIDIA is all about 185. So 185 bull bear pivot on NVIDIA. Yeah, I mean, NVIDIA long-term is a hold, absolutely. NVIDIA long-term is a hold. I'm watching Netflix, guys. Anyone watching Netflix with me? Netflix dip buy. This is my main watch into Friday, Thursday and Friday. If we get this this equity buy, I'm gonna get. I have some bids placed. You guys know where it is. If you're in the chat, you know where it is. So market is still rejecting. You guys see market's rejecting still, but it's rejecting at a very obvious spot, and it needs to start selling. Otherwise, we're going to put on pressure for bears. So if you're short, it's still kind of sweaty. It's a sweaty short. Is it too late to scale into Netflix? No, it's not too late. It's too soon? No, not too soon. I think that any dip buy on a strong company like Netflix, you're fine. I want to get in around 90 to 80. That whole range of the whole box here on Netflix between 90 and 80 is going to be an absolutely awesome buy, at least from what I think, right? This is my buy spot. I'm going to post my thesis on this later today so you guys can see it. I could just TP, guys. I could just TP SPY. Should I just TP and walk away and go enjoy my Wednesday? I'm up 8%. I'm up 8%. Someone said no. Someone said yes. Well, my target on Netflix is going to be back into 120. My target Netflix is back into 120. You guys want to see how much I'm up right now? I'm up. I'm up an embarrassing amount. I don't want to show you this. 7%. It's just not doing anything. Not selling until 687 or 689 break. Interesting. Yeah. I mean, 687. I mean, you're trading, if you're trusting the levels, that's what to do, right? Trades like this, to be honest with you, I bet you like you on futures trades, you probably have a blast right now. Futures traders are having a blast. Being able to just literally just isolate stops, just leave it and walk away. And it's probably the best thing to do. Would you hold after hours? No, I'm not going to hold out. Guys, I'm not going to hold after hours. What do you think I am? You think I'm a maniac? If you're short, just take profit. If you want to get 30, 40 cent downside move on 0 day, take profit, walk away. This is just a degen trade, guys. I'm really not I'm not trading this heavy. Make 50 bucks, make 100 bucks, make 200 bucks, walk away. I'm mostly here for tomorrow. I'm here right now because I want to go over levels for tomorrow. That was actually the purpose of me going on live today, was to go over what I'm watching into tomorrow. So what I want to do is I want to pivot away from this. Let's go over some charts. Netflix. Obviously, you guys know what I just said, Netflix, right? Watching 90 to 80 for long-term buys. Is it too soon? No, it's not too soon. I think you DCA, you dollar cost average into this, and that's it, right? On the worst case scenario, look at this chart for a second, okay? And go to your daily 200 SMA. Go to your daily 200, okay? And watch this. Look at where the daily 200 is. And look, almost every single time you buy at or around the daily 200, even especially beneath it, right? It's a good equity buy. Right now, we're very well beneath the daily 200 SMA. So for me, that alone, from just tacticals, this is a good buy. I know that the HBO deal, they overpaid for it by 20 billion. I know it, but it's not going to change anything. It's actually a better thing long term. It's a better thing long term. It's a better thing long term. Guys, how much am I down now? I'm now down 10% on SPY. I'm down 10% on my 0 day. I should have TP'd. I should have TP'd at my, I should have TP'd when I was up, I was up 20%. I was up like 100 bucks, 200 bucks. That's all right. So this level right here is the level we have to stay beneath. We need to stay beneath this level. 688.80. 688.80. That's your bull bear pivot now on SPY. 688.80. Going into tomorrow's session on ES chart, this is the most important daily close we've had in probably 2 weeks. The reason why I'm saying that is because look at the last daily close here. It was on the 5th of December, right? We are right back at that same spot right now here at ES. So this daily close matters a lot. It matters a lot. Supply highs here on ES 69.55. That is the all-time high here on SPY chart, on ES chart. Yeah, that's the all-time high. It's funny because the all-time high on SPY is really close. We're almost there. All-time high here on SPY chart is 68 or 689.64, right? That level right there. And on the SPX chart, it is, yeah, we're right. We are right at SPX 6,900. What tickers are you guys watching? I'm going to go over some tickers, guys. What am I missing here? One over Apple, one over Amazon, Netflix, SPY, ES, Qs. We go over Qs. What's QQ doing? 630 in Qs, right? That's your level in Qs. 630. 630 in Qs. Yeah, I mean, obviously Apple 280. Yeah, I know that's for tomorrow. Target. Why are you guys always tagging me in Target? Why are you guys always tagging me in Target? Target's green now, guys. I'm green on Target. I'm green on Target. My stop on Target now, if you guys are in Target with me, is under this low right there, 89.5. Microsoft. You want to see me win? You want to see me happy? I am probably up close to $4 a share now in Target, so I'm happy in this. But to be honest with you guys, my long-term view in Target is back into 120 plus, and we're gonna get there. I'm pretty confident we're gonna get there. SPY is dancing right now. SPY is shuffling in supply. SPY is shuffling in supply right now. I'm gonna hang out with you guys for 4 more minutes as we watch the market. Apple is, look, this is actually the most incredible thing right now. Watch this. Apple is making a high of day here at 280. If we can sit here under 280, this is going to be our top watch tomorrow, okay? Because it's creating a very beautiful build for us tomorrow session. Any advice of becoming profitable trading? I was laid off back in May and I'm trying to get ahead of this trading thing. Take it seriously. Big Cat, if you take it seriously and you show up every day, don't have to trade every day, but show up every day. Be there, right? And if you show up every day, get a view of the market and trade one system, one good system. You just trade a level-based system or something that works for you in the long term. If you do that every day, you'll be fine. And give it time. Don't rush it either. The worst thing you could do is rush it. If you try to rush it, you're gonna overtrade. You're gonna give back money. Yeah. My best system is the break and retest. That's all I do. That's Apple is break and retest. Everything I do is level based and is break and retest. That's all I do. Everything is level based. Uber. Uber is actually a name I was looking at, excuse me, buying, right? Uber off this 81. I don't know if you guys see this, but Uber, this is a buy here at 81. I see it, right? 81 buy. Costco also, COST. Watch Costco into earnings. Earnings on Costco coming up tomorrow. Tomorrow, Thursday the 11th. Earnings on Costco tomorrow. This is going to be important because I've always wanted to have some Costco shares, but I've never gotten the opportunity because it's always straight up. It's never straight down. I need a little bit more straight down, and I can get filled on some Costco. Yeah. Is 5K large enough to trade multiple cons or day trades? Yeah, it is. It's fine. Yeah, you could trade 5K counts totally fine. When is considered a break? What do you mean? When a stock closes above. If you see a 5-minute closure above, it's a break, right? So SPY is still in supply. Nothing's really happening. Market is now, we're now descending volume here because we're going into close. But it's an interesting FOMC, right? For people who are just joining in, FOMC obviously 25 basis point cut, fairly dovish in terms of his comments. We've moved from basically our demand today now to supply. The question is, what do we do now? You like bull calls? I'm not a fan of bull. I don't like bull. BUL I don't like, but if you have conviction and you like the name, then by all means. Bro, how late can you trade options on your broker? I can trade options until 3:59. 4 p.m. Sorry, actually, no, hold on a second. If I'm trading SPY, I could trade SPY options up to 4:15. Up to 4:15, I could trade options on SPY, on ETFs. But not on like equities, like individual equities. Your Apple, your Nvidia, Tesla, those stop at 4. Yeah, SPY is 4:15. SPY is 4:15, QQQ 4:15, IWM 4:15, right? They're all 4:15. This is a very interesting close, guys. Brett, can we get the Zoom class for one more day? Dylan, let me look into it. I'll look into it. I deleted it, but I'll see if I can get it back for one more day. I'll look into it. Apple again projecting off that 280. Where's Nvidia closing at? Let's look at chips for a second. Nvidia, look at Nvidia, right? This is look, if we actually flip weak in the market for whatever reason, Nvidia is a short, right? So Nvidia is absolutely a short for me if market flips weak. I don't know why my chart's doing this, but Nvidia 185. As long as we're under 185, I'm looking for shorts on Nvidia. So that could be a play for tomorrow as well. We could watch chip side weakness. Look at AMD too. AMD barely bouncing. AMD is still within yesterday's range. This is interesting, right? You see how this name is still within yesterday's trading session, whereas you have a name like Tesla, who's obviously, right, completely made the move higher, right? Names like Amazon, even names like Amazon are strong. Right? If Amazon's strong and you have Nvidia that's still in the gutter, Nvidia and AMD are still in the gutter, you know something's going on there, right? So let's watch that tomorrow. That's going to be an interesting session for us to see. Maybe we look for some chip side weakness. Brett, what are your levels for Costco to buy? Costco, I haven't posted much about Costco yet. It's more of just something that I want to own. But in terms of levels, my levels are 870 and 792. For me personally, I want to see sub 800 to buy this name. Sub 800 to buy this name. I always like buying things that I've sold off beyond 30% from its highs. And so sub 800 is going to be where I'd be involved. So I don't know if we'll get that post earnings, but if we do, that's where I'm buying. Okay. What about Meta? Meta's 550. Meta 550 I'd buy. I know it's far away and people are probably going to say it's not possible, and you're probably right. But 550 is where I'm involved in Meta. A lot of good companies I'll watch, and I will wait and I'll watch and I'll wait and I won't get filled on. But if it does happen and we get the opportunity, we'll take it. So SPY, again, rejecting off my level here. I wonder how my contracts are holding. Do I want to look at them? No, I don't. My contracts are sitting at break even right now. I'm sitting break even on my contracts. I'll give it 58 more seconds. I'll give it to this candle close. You can't hold 0 days for long, guys. Unfortunately, you can't hold 0 days for long. I did trade puts at supply, but it's rejected a little bit. But the 0 days are just, they're getting smoked. The longer you hold them, the more they get smoked. So I'll give it 30 seconds here until candle close. If it closes weak, I hold. If it closes where it's at, I'm gonna sell it. INTC. Intel's strong. I mean, Intel's strong. Ten seconds to close. Yeah, is that ES69 still holding? Is that what it is? It's probably ES69, right? That's what it is. ES6900. I'm curious if we do this candle though. Wait, what are we? 345 candle or 15 minutes to market close? I think that actually the best trade during FOMC was a long side above that 685. Yeah, I'm gonna come live on. I'm gonna be live for almost. I'm gonna try to go live for every FOMC, and we're gonna bring the team on too some days. Mike and Rav will probably hop on as well. If I can get them on, if I can get them on, then we'll hop on. But I gotta get them on. I gotta convince them. I'm sitting break even, guys, in this trade. I mean, my contracts are sitting break even on my SPY trade. They're decaying a bit, actually. They've decayed. They're decaying because the market closes in 30 minutes here, so they're not doing too hot. Yeah. But yeah, no, I didn't even announce this on. I didn't announce this at all on the Discord or anything. So you guys were here. You guys were here. 3 minutes till candle close here. Let's hold for 3 minutes. Let's give it a second. The last 10 minutes of every market close is very volatile though. So like we could see, I mean, obviously we've seen a lot of volatility already, but we can easily see a dollar candle right into close, especially on an FOMC close. You can see dollar candles all over the place. Yeah, you guys heard Mike on the stream this morning. He said he's going to shave his head bald if Palantir is not, if PLTR is above 100. He's out of his mind for that one, but I'm with it. He's tweaking. Yeah, he's tweaking, but that's all right. I love the conviction and enthusiasm, though I think he's going to be a bald man next year. I think he's going to be a bald man. I'm green on SPY. I'm green on SPY, guys. I'm green on SPY. I'm green on SPY. I'm officially green here. I'm officially green. My finger's on the trigger though. Make sure you tell everyone tomorrow. Yeah, I'm going to do it. I'm going to, especially when I do, I'm just here with you guys to test this. This is a test stream. I don't know if this is something you guys would like me coming on during FOMC, but I was thinking of coming on for FOMC. So every time we have FOMC like this, I'm gonna hop on. And here's the thing, if I take a trade, I'll let you guys know. So like, you guys heard me get into SPY, right? I mean, I'll tell you guys when I'm gonna take a trade. I know it's mostly lotto size when we do this, but I think to be honest with you, the market analysis is probably way better than the trades. The market analysis is better than the trades. All right. Guys, I am selling my SPY. I'm up 8% right now. I'm up 8%. What am I going to do? Market closes in a few minutes. I was hoping we get the sell-off sooner, but I TP'd. I closed it. I hope it sells to you guys. Everyone's still in it, but I TP'd. But here's the thing, my view on SPY is that all we've done into this morning session is we've closed into supply. And tomorrow's session, do we reject supply or do we continue, right? But yeah, we're closing right into our big supply zone. Let's see what happens here. Guys, thank you all for joining in. Thank you all for tuning in. I know it was a last minute thing we did, so thank you all for everyone that's here. I will see you guys all tomorrow morning. Make sure you guys close SPY out. If you just took SPY as rooted E, close it out, right? Don't tag me at 4:15 wondering if you're swinging this, all right? You should be break even, if not slightly green. Okay, that's it. Guys, I'll see you all tomorrow. Have a happy and safe trading session. Bye, guys.